Today is August 20th edition of Back Roads of Illinois. We were Central Illinois agriculture source and in the Midwest alongside in Central Illinois. We're glad you're here on a Tuesday. I am glad to join with you guys on the show for today. This is serious business for your agricultural news and markets update on Back Roads of Illinois, crop tour in the Midwest, fertilizer prices is not lumping, beef demand is going to be high. We are watching for the Pro Farmer Crop Tour for right now with Farm Journal. They are getting yield from the corn and soybean in the Midwest. Brian Greed, he is the head of the Pro Farmer Crop Tour. I interviewed with him on the spring. The fertilizer prices are slumped for right now with the commodity prices in the Midwest. These prices are going to be lower than previously years since 2022 start with the war in Ukraine and Russia. Now within the Middle East, the beef demand is higher. The question is for some ag economists in central U.S. beef herd it's shrinking according to the University of Missouri Food Institute and Policy. And Oklahoma State University, Dr. Peel. We were coming back with our guest with Merrill Crowley from Ag Trader in Watska, Illinois. Then we were talking with other great guests and a good friend of the show with Brian Hoops for Midwest Solutions in Springfield, Missouri. Stay tuned on Back Roads of Illinois. We were looking forward with Merrill Crowley from Ag Trader talk with O'Brien Markets in Watska, Illinois, north of Champaign County. Welcome to join us for the show. Merrill, how are you today?
I'm doing really good. It's a beautiful day today, and it's been a beautiful summer. One of the reasons we got such big crops.
Let's start with our conversation about updating on crop progress in central Illinois.
Well, everything around here certainly looks great. The USDA gave us some large expectations for production, and big crops tend to get bigger. With this great weather, it would be logical to expect better fill for both corn and soybeans, which would increase the yield. However, the USDA is supposed to be looking forward towards the end of the year and has given us in August a huge goal for our production. Could it be that the August report is bigger or the biggest of the year? Well, that's possible. I think there's a good chance of that. Currently, we have the Pro Farmer Tour going on. They found, I think it was a bushel less in South Dakota. Ohio was just a tad less, just like 0.3 bushel, not much to say at all. And what I'm seeing so far today really doesn't suggest any real improvement over last year. And that kind of has me thinking that's a little bit strange. If you're going to go from 177 to 183, roughly a 6 bushel increase, you should be seeing some of that in the fields. The corn conditions right now are down 8% since the first week of June. With the soybean conditions also down about 4%. Now, the trouble is, it doesn't matter if the conditions are running 68% or if they're running 57% like they did last year, because the condition reports at the end of the year don't matter. The USDA uses the surveys, they use their field, on the boots ground for the field surveys. And so that's what we're going to end up getting. A lot of people take these condition reports to be something that's a USDA that's going to filter into a USDA report, and they don't. So it's more of a trading item so that people kind of get an idea what the crop is. But I guess right now I'm thinking that we're going to see this crop stay pretty much. I don't think we're going to exceed it, but it's also going to depend on how the weather finishes the year.
You're watching for the Pro Farmer Crop Tour in McLean County, and what?
They're politicians. It's hard to tell what they're going to do exactly, but and I think right now with the way things are hitting China financially and their economy, they're going to have to go through some sort of a recession, and that might make them more willing to trade. We are seeing our dollar drop. That would help our trade. So a lot of things can happen between now and November. But I think right now the main source to watch is who gets elected.
Is there anything would you like to tell our listeners about cattle markets for right now?
Well, I guess the last time we talked, I was talking about the markets being in 4 years and saying I just can't see them continuing to go higher. We are currently $13 as of yesterday. We are currently $13 below this year's high. After today, we're another $3 lower, so about $16 lower from last year's high. And I was just doing some reading about what they were talking about on the cattle on feed report that's coming up Friday. They're looking for just about everything, the marketings to increase. And they're also talking about the number of, there's about 34%, I believe, more heifers being kept for breeding. So, and with the cheap corn price, I think there's going to be a lot of farmers trying to walk the grain off the farm in the form of livestock. The other thing that I think is worrisome, especially to cattle, is the fact that we look to be in a recession or going into a recession, and cattle prices do not fare well during recessionary periods.
What is the forecast for the cattle on feed?
Let's see. On feed is the average investments for on feed is pretty much even, 100%. Placed on feed, 104%, and marketing, 108.2%. The other thing we have to watch is we're also seeing an increase in imports from Mexico of cattle for feeder cattle. So that's going to kind of wedge into our market to some degree. And I haven't seen it yet, but I would think that we'd be starting to pull more cattle out of Canada with the current prices we have for feeders.
Do you have any final thoughts?
Well, I have heard some stuff going on about doing basis contracts here. The idea seems to have some merit because you would think with as large a crop as we've got, we're going to see a fair amount of old crop move into the elevators, decreasing their storage capabilities for the big fall we seem to have facing us. And but the only thing is with the freight rates right now, it is putting the spreads under pressure. And once that pressure comes off, we could probably see the spread open up up as much as 18 cents more than the spread is now. If that were to occur and you have basis contracts, you stand to lose quite a bit of money. So I think I'd really think hard about a basis contract, especially if you don't think you're going to get the performance until say March, and you have to roll from Dec to March or from Nov to Jan and then to March. It's just not going to fare well for anybody that has a basis contract.
Thanks, Merrill.
You're welcome. Thanks for having me.
This is Merrill Crowley from Ag. Welcome back to the show with Brian Hoops for Midwest Solutions in Springfield, Missouri. How are you been?
Hey, I've been doing well, Cesar. Hope your summer is going well as also, and glad to talk with you once again.
Let's start with our conversation about the yields for right now with pro farmer crop.
Yeah, so the tour is ongoing, and day one they were in the eastern parts of Ohio and out in South Dakota. Very variable yields, and I think day one found that there was some concerns, maybe more than what the USDA had indicated, as yields in South Dakota came in at just actually below last year's levels, 156.5 bushels per acre. Ohio was a little bit below last year as well, 183.2. Now, the crop size sounds like today, as they're into parts of Nebraska, working their way in Indiana and parts of into Illinois, are improving as they've gotten away from some of the flood damaged areas and have found just very, very incredible type yields, especially in parts of in Nebraska, it looks like this year. So should be very closely watched trade. They will certainly be focused on these yields after the tour concludes today and as they move into parts of Illinois, Iowa tomorrow, and then finishing up on Thursday, a final announcement on Friday afternoon. Um, Trade will be, trying to see how we compare to last year's crop, and then also how do we compare to where the USDA currently is forecasting each of these states.
What is the yields for right now in the eastern leg for beans?
Yeah, so soybeans, they do pod counts, and those are a little bit harder to say with any degree of accuracy, more so than the corn. Pod counts in Ohio at about 1,230 pods per square foot. That's actually down from last year. It is above the 3-year average. South Dakota, the pod counts were 1,025, a little bit above last year and well above last year. So it looks like yield potential is there. We just need to have a good finish to the growing season. And there's going to be some concerns about that in parts of Dakotas with a lot of extreme heat, but they are catching some rain in South Dakota today, and on that western leg, there's some rain air in the area. So maybe that'll allow us enough moisture as kind of act as insulation against that extreme heat that we're expected to see later in the week.
How is the corn yields as far as beans and down Missouri?
Well, I think they're going to be really good. You get far south where I'm at, the corn crop is essentially made. In fact, there is harvesting of some corn by Joplin over into Oklahoma. There's a lot of the crop that.
What is your thoughts on this harvest season in the Midwest?
Well, a lot of the questions that we get right now is, are we putting in a early harvest low? And I don't think we are at this point. I think there's not enough of a harvest type bottom to be in place. Usually, we don't make a bottom in mid-August. If this was mid-September, I think that's certainly a possibility. But we probably have a little bit of a technical bounce going on, digesting some of these yield data. And once we can see a return to maybe some rainfall, get away from the extreme heat that's in the forecast, turn back lower, where we should go lower into the September supply and demand report. There's a lot of talk already about yield potential in this September report. And if the USDA increases those yield potentials for corn and for soybeans once again, that those bigger yield numbers then could give us indication of some harvest type lows. But I think we're a good 3-4 weeks away from getting any type of that news digested into the marketplace. It feels like right now this is kind of our last small technical rally ahead of the harvest time frame before we see some harvest pressure likely to weigh on the markets.
Is there anything would you like to tell our listeners about these crop privates tour in your state of Missouri?
Yeah, unfortunately, Pro Farmer doesn't get down into the state of Missouri. They stay farther north than what is going to have. So um, we can look at just kind of anticipating what our yields are expected to be. We think there will be very good yields this year. Won't be reflected in this crop tour, however, but with the crop ratings being well over 80% for most of the summer for the state, we do expect to see an average anyway that would be record large.
Did you went to the field?
Um, yeah, I haven't been out in the field or been on the Pro Farmer Tour. I've done some tours, small tours just from the stopping and checking on kind of a windshield type tour, just stopping and checking some crops here and there, which things look to be very good in the majority of areas, and that's why we're seeing pressure on prices. Why we expect to see some pressure on prices.
Do you have any final thoughts?
Well, for producers, I know a lot of producers are undersold at this point in time, either new crop sales, old crop sales, and um, hopefully they're in the process of cleaning everything up if they from an old crop standpoint, if they haven't already. From a new crop standpoint, there's a little bit of time yet. There's probably some downside pressure yet. Typically, in a year similar to this, where we saw big stocks use ratios similar to 2019, we saw maybe 850, I think, in soybeans that year, and around 350 or 355 in corn. I think those are potential downside targets, assuming we have near perfect growing conditions through the rest of this year. That we could see some pressure again through late this month and into September. We could see additional downside weakness before we start to turn things around.
Thanks, Brian.
You bet. Thank you so much. Great to talk with you, and hope you take care.
This is Brian Hoops for Midwest Solutions in Springfield, Missouri. This is your commodity markets update on back roads of Illinois. Corn futures finished and down 8 to 10 cents. Soybean futures finished and down 7 to 4 cents. Wheat futures finished and down 7 to 9 cents. Cattle futures finished and down 4 to 6 cents. Feeder cattle finished and down 7 to 8 cents. Lean hogs finished and down 3 to 5 cents. Crude oil finished and up 10 to 9 cents per barrel. Dow Jones finished and down 7 points. Thanks to Merrill Crowley from Ag Tradering, watska, Illinois, and thanks to Brian Hoops for Midwest Solutions in Springfield, Missouri. We're running out of time on our show, but you can listen to our show on YouTube and whenever you get your podcast. This has been Back Roads of Illinois. I am Cesar Delgado.